Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. This is our forex technical analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. Before we pull up our video, we always want to start off our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategy we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. As we said, this is our forex technical analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. In each video, we look at the prior session's price action to come up with key support and resistance price levels. We'll review the gold chart to come up with leading sentiment. We'll try to create a low volatility and inside bar watch list, and we have an education spotlight at the end. Please send your feedback and comments to contact@dmbfx.com, and let's head to the charts. As we look at this week in Forex, we are seeing a couple key events. First and foremost, can the ECB save the day? Once again, problems about the European debt crisis have come to the forefront. On Friday, the spotlight was placed upon Spain when data came out showing that their borrowing from the ECB has stepped up 70 billion. They were once around 150 billion, and then in the month of March, they're up to 220 billion. So that brought renewed concerns about the European debt crisis. And so will the ECB step in and purchase more debt as they have in the past? Here in the States, once again, will there be a QE3? Fed Vice Chairman Yellen stated that the Fed could keep interest rates through 2015. Now, of course, prior to that, each time one of them speaks, it increases a year. It was 2013. Last Bernanke said 2014. Now here she's saying 2015. So, of course, this brings about renewed concern, renewed interest into QE3, which will be weak for the dollar because that's printing money. So we'll see what happens. Canada is going to hold their announcement this week, and they're expected to hold their interest rate the same. And then finally, the mixed UK recovery. Of course, the data was showing that they are in contraction in the fourth quarter, so we'll still see what the data shows for the first quarter. But they did get some positive economic data for this week. Not to mention, there's also going to be some news from the RBA. So there's definitely some chaos this week. And we should definitely keep alert of the calendar and see what's coming out as we look at our forex positions and our future trades. All right, so we're starting off here with our sentiment leaders, the dollar, gold, and crude oil. The dollar has found its support around 79. We did bounce here, going up. Now we're having trouble getting above 80.25. So still sideways price action. Haven't made its way all the way back here to 81 again. But with the Eurozone and the Spain debt crisis, we might see some strength with the dollar, especially with the euro dollar. Of course, the issue is going to be with that talk of keeping the rates low and quantitative easing would be weak for the dollar. So we'll see how it goes. But definitely looks like we're in a range. A couple little blip outs here. But we seem to be holding on to 79 as support for the dollar. So as we consolidate for the dollar, what does that mean for gold? Well, gold is also consolidating a little bit. It was a little bit weaker, and now here it is trying to hold on to this 1660 price level. We'll see. I mean, all of our moving averages, 10, 20, 50, have broke below the 200 moving average, so that's a little bearish. That's sort of the death cross, as they call it. So that's weak for gold. Of course, gold had that big run up all the way up here to 1800. So we'll have to see where gold is. So gold, I would venture to say it's in an uptrend, but it's sideways to the long term, but sideways to down here for the short term. And finally, crude oil for our pocketbooks at the gas pump. It's holding on to 102 as support. Holding on to 102 as support. We really needed to break down here to really do anything for our pocketbooks. Okay, so let's start off with the daily chart of the euro dollar, and we can see we've come back to this 1.305 price level. Here's where in the past buyers consistently have found value and have tried to defend this price level. Will they continue to do so? Only time will tell. As we talked about earlier, will the ECB step in, the UK recovery, as far as the euro dollar and the pound dollar. All these things play into the strength of the euro dollar and the pound dollar. And right now, we're showing a little weakness here. And of course, long term, as we zoom out, we are in a downtrend, long term. So this is not exactly against the tide. So we could be having a larger falling 5, 10 type method. But it's definitely going to be interesting to see what happens. And of course, if we break these price levels, we certainly could be looking to test the January lows. As far as our 1 hour time frame, we're in a neutral zone right now. We are below our long-term moving average. And you can see we're right at this 1.307, 1.308 price level, trying to defend it. There's a little bit more room below it also that we should find some volume support. But overall, our indicators are looking for possibly being oversold. We have that push down with some of the news on Friday. We'll have to see again, will the buyers once again step in and find value at this 1.30150 price level. So, what about the pound dollar? The pound dollar also showing some weakness, sitting at some, let's make sure this is the pound dollar. 1 and 2. There we go. 1.58. This is a place where buyers have found value in the past. They have defended this price level before. And then, of course, we have some more support around the 1.566 price level. We're sitting at the 50 moving average. We also have the 200 moving average to watch as we zoom out longer time frame. You can kind of see we really have been between the 1.67 and the 1.52 price level long term. So again, are we going to get out of this consolidation? We've gotten some whips, but even here looking at the daily, you can see we've really been between 1.56 up here to about 1.59. On our 1 hour time frame, ever so slightly, we're in a buy zone just below our long-term moving average, and just like the euro dollar, we're starting to see some overbought time because of this huge 3 hour push down. Finally, we'll look at the dollar franc, and we're going to get the opposite in our big range, 0.908 up to 0.92. But here we found support at the 20 and the 50 moving average, and instead of a push down, we've got the 3 hour push up here. However, you can see right here at this 0.9202 price level, this is where sellers have in the middle of this zone, sellers have found value and they've tried to push things down. So if we can get above this, we certainly can go try to test the top of the range. We are just at the top of the neutral zone, trying to get into a sell zone above our long-term moving averages, and here our indicators are starting to get into an overbought range. As we look at our spot list, our watch list is what I'm trying to say. Our low volatility watch list is our 1 hour time frame using Bollinger and looking for that contraction. And for right now, we're just going to be looking at the dollar yen. Aussie dollar may be setting up, but right now we're watching the dollar yen. Our inside bar watch list is looking at the range of the day, comparing it to the previous day. And right now we don't have any candidates. So let's move on to our education spotlight. And here we're talking about what separates good traders and bad traders. What do bad traders do that good traders avoid? What is the difference? And we spent so much time talking about trading plans over the last several months, and so now we're going to talk about high probability trading and what exactly it is. But that's what separates winning traders and losing traders. They focus in on high probability trades and avoid the common pitfalls of fear-based trading and emotional trading. And so that's where we're going to focus here over the next couple weeks, so we hope you'll follow us in our journey. Again, always like, comment, subscribe, tell us what you want to see. If there's specific videos you want to see, put some comments in and we'll put them up for you. And you know about our resources. We have a great free video course for you, our coaching, working with a couple clients right now about developing that trader's mindset. Even if you don't have the time, put our expertise to work. And if you're looking for signals, we have those too. But in the end, it's all about having the trader's mindset to implement whatever strategy you decide to use, and that's what we help you do here at Move Up with Mike. Thanks, guys, and I'll see you next time.